Big Q2 earnings recap, GOGL, TSLA, IBM and more, market highlights. In a dramatic turn of events this Wednesday, the stock market soared, fueled by a groundbreaking trade agreement with Japan's automotive sector. The Dow Jones Industrial Average surged by 507 points, a robust increase of 1.14%, while the S&P 500 set a new record, closing at 6358, up by 49 points. The Nasdaq, although trailing slightly, still managed a respectable gain of 127 points. Not to be overlooked, the Russell 2000 index, representing smaller companies, outperformed with a 1.48% rise. Amidst this market euphoria, the real estate sector presented a contrasting picture. Existing home sales cooled off to their lowest since last September, registering at 3.93 million homes, below the anticipated 4.0 million. However, the average sale price reached a record high for June at $435,300. Interestingly, sales dynamics varied significantly across regions, with declines in the South, Midwest, and Northeast, contrasting with gains in the West. But here's where it gets controversial. The after-hours trading session brought a deluge of Q2 earnings reports that could sway investor sentiment. Alphabet Incorporated exceeded expectations with its earnings, marking the 10th consecutive quarter of surpassing forecasts. Notably, YouTube's ad revenue climbed nearly 13% to $9.8 billion. However, Alphabet's spending also saw a significant uptick, with $22 billion expended in Q2 alone. Tesla's results painted a grimmer picture, missing earnings expectations and reporting a sharp 89% drop in free cash flow. Yet, the company's stock edged higher, buoyed by ongoing plans for its robotaxi launch in 2026. IBM, despite beating earnings expectations, saw its stock price dip by 5% in after-hours trading. This decline came even as the company reported revenue growth and acquired AI consulting firm Hakoda. Chipotle's earnings were mixed, with a slight earnings beat overshadowed by flat revenue and declining customer traffic, signaling potential challenges ahead. ServiceNow, on the other hand, delivered impressive results, with earnings and revenue exceeding forecasts, driving its stock up by 7% in late trading. As we look to tomorrow, the financial landscape remains bustling with activity. Key indicators to watch include weekly jobless claims, flash S&P services and manufacturing PMI, and new home sales data. Additionally, earnings from major companies like American Airlines, Honeywell, and Union Pacific will provide further insights into the economic environment. And this is the part most people miss. Amidst these fluctuations, opportunities and risks are ever present, inviting savvy investors to decipher the market's complex signals. What are your thoughts on these market dynamics? Do you see more opportunities or challenges ahead? Feel free to share your views and engage in this lively discussion. U.S. stock market reacts to Trump's Fed visit, mixed futures and earnings reports. Are you ready to dive into a whirlwind of market drama that could reshape your view on economic power plays? U.S. futures are sending mixed signals today after news emerged that former President Donald Trump is set to visit the Federal Reserve. This move is stirring up fresh controversies by intensifying pressure on Fed Chairman Jerome Powell, marking the first time in almost 20 years that an American president has made an official stop at the nation's central bank. Early Thursday, reports indicated that S&P 500 futures remained largely unchanged, while Nasdaq 100 futures inched up by roughly 0.22%. In contrast, futures linked to the Dow Jones Industrial Average slipped by about 0.29%. For those new to this topic, futures are contracts that speculate on the future value of an asset, giving investors early insight into market expectations. But here's where it gets controversial. Post-market on Wednesday, major players among the Magnificent Seven of megacap stocks released their earnings. Alphabet saw a 2% uptick after its second quarter earnings and revenues surpassed expectations. Meanwhile, Tesla's shares fell by 4% in a volatile session, largely because its auto revenue declined for the second quarter in a row, news that disappointed many investors. To add to this mix, IBM's stock tumbled by 5% after its software revenue figures failed to meet forecasts, thereby exerting downward pressure on Dow futures. The enthusiasm wasn't confined to these headlines alone. Earlier on Wednesday, the S&P 500 recorded a 0.78% gain, marking its 12th record close this year. The Dow Jones Industrial Average surged by 1.14%, a jump of 507.85 points, coming tantalizingly close to setting a record close, just shy by roughly 4 points. Not to be left behind, the Nasdaq Composite advanced by 0.61%, breaking the 21,000 barrier for the first time. This progress underscores a broader momentum that many market watchers find both encouraging and, at times, perplexing. Adding another layer to the story, the trade front has witnessed some bullish developments this week. On Tuesday night, President Trump took to Truth Social to announce that his administration had secured a massive deal with Japan, which involves imposing a 15% reciprocal tariff on Japanese goods. And this is the part most people miss. The Financial Times, with confirmation from Bloomberg via diplomatic sources, reported that the U.S. is also advancing toward a similar deal with the European Union, again featuring tariffs of 15% on imported goods. For beginners, these tariff strategies are designed to protect domestic industries, though they often spark heated debates about their effectiveness and long-term impact. Jeremy Siegel, a respected finance professor at the Wharton School and a senior economist at WisdomTree, noted that these trade negotiations are infusing a sense of clarity into the market. We're beginning to see some clarity here with these deals being made, and that's certainly bullish. And certainly that keeps the momentum going in the stock market, he explained during CNBC's Closing Bell. Such comments have raised an intriguing question. Are these trade deals a genuine pathway toward market stability, or could there be unforeseen repercussions? Looking ahead, several marquee companies, such as Dow, Honeywell, American Airlines, and Union Pacific, are set to announce their earnings on Thursday before the opening bell. Investors will also be monitoring key economic indicators like weekly jobless claims, the latest figures from July's Purchasing Managers Index, and June's new home sales. Each of these data points can offer valuable clues about the broader economic landscape. In other notable moves, the healthcare sector enjoyed its strongest days since mid-May. Out of 11 S&P 500 sectors, 9 closed in positive territory on Wednesday, with healthcare leading the charge with a 2% gain. Thermo Fisher Scientific was the star of the show, soaring by 9.1% after posting Q2 results that beat market predictions. Meanwhile, both Moderna and Centene recorded impressive gains of nearly 6%, reinforcing the sector's robust performance. This flurry of activities begs a crucial question.